What's going on, guys? Welcome back to another video. And in today's video, I'm just going to be covering a couple of stocks that I've been watching lately and some possible trades that I'm going to get into, as well as, what's coming up in the market this week. So as you can see, as the S&P 500 heads higher, the smart money and dark pool, big institutional buyers are not buying as much. So I'm assuming that there's going to be a pullback on the S&P 500 as it is near all-time highs. We have Powell speaking Wednesday, so there's probably going to be some volatility on that day. And, when it's all-time highs, people like to take profits. So I do assume a pullback is coming. And I do also expect tech to pull back a bit before their earnings, which could actually present some nice opportunities to scale into some plays. So we're going to get into some other events coming up and some stocks that I'm looking to get into. So before we get into it, if you don't mind dropping a like and hitting subscribe, it really helps out the channel. And let's get started. All right, so first up is PLTR. Been talking about this one a lot lately as we do have DoubleClick Demo Day on Wednesday. We know ARK has been adding a ton of Palantir, and according to this article, Goldman Sachs is bullish. Palantir has a potential gap fill, so it did hold this 2141, even though it did have a rough day. But we're still bullish on this because it didn't break that. Now, I'm long on PLTR shares, but as far as a trade, I did take a risk managed debit spread. The reason I took a debit spread is because these moves up and down don't hurt my contracts. All that really matters is I'm above 25 or for max profits above 26 near expiration for the max profits. So here's what I took. I bought the 25. I sold the 26. And my average cost for this is $12.67. I got 3 contracts. So that is a max risk of $38. And my max gain is $261.99, so $87.33 per spread. So I am up a little bit, up about $3-ish per spread, and that is what I took. So we're hoping that this event pushes Palantir higher. Then as far as my shares go, I also hope when their stock price increases that the premium on the contracts increase so I can sell some covered calls and collect some nice premium, and then hopefully, after the event it sells off, and I just get to keep the shares and the premium. So that's what I've been working towards on these sell-offs, is just building out a nice position. So I have enough to sell some covered calls and enough to keep in case those shares got pulled away from me. Next up is NVDA, and we talked about this on Sunday night in the Patreon and again this morning pre-market. So they had their investors day, and unfortunately I was busy at work. I didn't even get in on the trade that I was eyeing, and NVIDIA had a really good day. They were up 5.62%. So for NVIDIA, that is $32.36. Just a huge pump today. So from around 570 all the way up to 606. And you can see on their Twitter, they had their NVIDIA GTC 21 keynote. So they just talked about, all their newest stuff going on, building AI across the United States, what it takes to create an AI workforce. They just went over a ton of stuff. They also had some other news come out. They were dropping a ton of news today. So NVIDIA announces new DGX SuperPod, the first cloud-native multi-tenant supercomputer, opening world of AI to enterprise. They got a price target upgrade to $620. So just a ton of bullish news for NVIDIA. Pretty bummed I didn't get in on something like a debit spread. This morning you could have taken anything from like a 570 to a 575 debit spread. 570 to 580, and you would have been at max profits pretty much, if NVIDIA does hold their gains till like this Friday. So missed out on this one, not going to FOMO in, but NVIDIA could continue to run the rest of the week. I'm going to keep watching it, and if there's a trade to get into, maybe I'll take another risk managed debit spread. But yeah, if you guys want more videos on debit spreads, I'm really into those right now. They're a lot safer than naked calls, so just let me know if you need more breakdowns on those, and I'll be happy to do a video on that. Next up is IPOE. This is SOFI. You guys know I'm pretty bullish on this company. Small caps and SPACs are getting destroyed right now, which has, presented a nice opportunity to build out positions at a sale. So their fair value is around $23.91 according to this article, which represents a 35% growth from its April 9th price. That 35% is actually closer to 40% now after today's sell-off, sitting around $17. So what I'm looking to get into, if we were to sell off a little bit more in the coming days and weeks, is the January 2023 long call or leap. 20 strike looks attractive to me. There is a good amount of open interest, a little bit of volume, and the implied volatility is not too much. So I think that's a really good risk to reward ratio. For $635, you get a long time for this to be in the money, and it's almost at the money anyway. So I do know that IPOE's short interest is pretty high, but this will give you plenty of time for the catalysts to play out, such as the bank charter, earnings, just more news for the company. And come September, when college students start paying back those student loans again, when that resumes, maybe people will go through SOFI to refinance their student loans and get a better rate. So this is the options profit calculator. I love using this website just to visualize risk reward. Now this thing's not always 100% accurate, but it gives you a pretty realistic representation of what can happen with your option. So the option we chose, the one we talked about, is 648 days away from expiration, giving you plenty of time for this to play out. I just chose a range from 15 to 39.75. You can tweak this however you want. I know it's gone below 15 and it could go above 40, but just for visual representation, I chose that. Now, this gives you a ton of time for this to play out with the news and catalysts coming up. It's almost stress-free because you have so long until expiration. So no matter what it does in the short term, you have plenty of time for things to play out. You know, analyst updates, analyst upgrades, price target upgrades, etc. I do think this will be well above $20 by January 2023. So let's say it just goes back to all-time highs, maybe by June of 2022, just to $30. You're making over 100% on these calls. So I just don't see the point in risking short-term options. They are cheaper, I understand, but I think paying for that longer expiration is much smarter. I do think these long calls are very mispriced at the moment, just because the overall SPAC market and IPOE has been slacking. So I'm definitely looking to get into these. Maybe we could sell off a little bit more down to 16 or so, and these would become even cheaper. But that's what I'm watching right now. Let me know what you guys think about this. Next up is Skills, and this one is down almost 50% on the month. So I do have a feeling that the bottom is near, but obviously you don't want to catch a falling knife and you want to wait for a trend reversal. But this article really does mention, how Skills could be a huge win for its investors. I'll link this below if you guys want to read through it, but Skills has been nearly doubling its revenue for several years in a row. Sales grew an impressive 90% year over year in 2020 to $230 million, and their roster of games also was bringing in more than $1 million as annual revenue rose from 23 to 36. Now, even more impressively, Skills posted 95% gross profit margins in 2019 and 2020 because of their sustainable platform that requires little overhead and upkeep. So this is a good company. It's not one that I'm personally interested in holding long term, but I know ARK is pretty bullish on them. They own Skills as well. But my idea would be for a longer term swing or a trade. So if I bought 100 shares of Skills, that would cost me about $1,600. And my idea would be to sell a covered call on it. Now, since my average cost would be $16, I would sell the May 21st, so a few weeks out. I would sell the 20 strike. I would collect automatically almost $100 of premium. Now, if Skills reverses and heads above 20 and those shares got called away from me, well, I'm making $400 because the difference in my average cost in that strike price is 4 times 100. So that's 400 plus I'm keeping this premium. So that's a gain of $500 just for buying this and selling a covered call. If Skills doesn't reach that 20, well, I keep my shares and the premium. So really being the seller of the options is the way to go. Obviously, you guys can play calls if you want to do that, but this would be my idea for Skills, and that's what I'm looking to get into. That's pretty much it, guys. I will say 2 other growth stocks that I'm looking to add more shares to would be Teladoc and Lemonade. I like them where they're at. I think they're in pretty good buy zones for the longer term outlook, but that's pretty much it. Those are the plays that I'm looking for and the events coming up. Please like and subscribe, and have a good one.